Good morning, everyone. This is Jeff Cooper with the Daily Market Report coming to you before the open on Thursday, January 31st. In keeping with our projections, gold and the precious metal miners exploded this week. Apparently, the Jerome Powell towel throw, his throwing in the towel and capitulating on normalization of interest rates in favor of more dovishness, wasn't such a well-kept secret, as gold had been trending up smartly in anticipation of Fed Chair Powell's throwing in of the towel and capitulating to the market's December hissy fit. This week's spike in precious metals was telegraphed by my triangle pendulum buy signal in GLD, and here's what that signal looks like. First, I want to show it on the dailies. So you can see that after the strong run-up in December, gold consolidated. This is GLD, the gold ETF, consolidated, tracing out a pennant, and it gapped below the bottom of the pennant, looking like a failure. However, 5 days ago, it gapped back up, clearing the top of the pennant, and that triggers my triangle pendulum sell signal. It occurs when an item traces out a triangle or pennant and breaks one way out of the triangle and then quickly reverses to the other side of the triangle. We alerted members to go long GDXJ, the Junior Gold Miners Index, when this signal was triggered several days ago. What's interesting is that the S&P may be working on a triangle pendulum sell signal, and we're going to go and take a look at that. So here you can see that the S&P has traced out a triangle of its own. Here's the top of the pennant, the bottom of the pennant, and it broke out of that pennant yesterday on the heels of Powell's dovishness, newfound dovishness, I might add. Trade back below the bottom of the pennant formation, right around here at about 2640, will trigger the sell signal. However, trade back below the January 18th high, that's right over here, Friday, January 18th high at 2675, will trigger a soup Nazi sell signal, implying a pushback below the top of the pennant, both of which could be precursors to the move below the pennant and a meaningful reversal. The soup Nazi sell occurs when an item makes a new 20-day high, which you have here and here, and then reverses back below that high within at least a 4-day interval. The reason for within that 20-day look back, the purpose of the 4-day interval is to guard, obviously, against continuation patterns. And the reason this soup Nazi sell signal works is because there are a lot of systematic trend followers that buy new 20-day highs and sell new 20-day lows, but if there's no follow-through and the item reverses and stabs back below the initial high, which in this case in the S&P would be 2675, the trend followers are cooked and there's no soup for them. So you've got two possible pending sell signals. The soup Nazi, which will lead to a push back below the top of the pennant, which in turn could lead to a break of the triangle, which should see further on selling and a continuation down to at least a bow tie, this bow tie of the rising 20-day and declining 50-day moving averages. This is around 2600, and if this occurs, I expect the pressure perpetuated by that will create a push down to around 25 70 right in here, this region of support, prior support. Is there reason to look for a reversal here? Well, let's take a look at the weeklies. Pull back the lens and look at the weeklies, and I think you'll see what I'm talking about. The S&P is flirting with a weekly declining trend line from the tops right here. It is also flirting with a backtest of its declining 20-week moving average. Test of the 20-week moving average, declining 20-week moving average, are called Holy Grail sell signals. Opposite for buys. Pullbacks toward a rising 20-week or 20-day moving average are called Holy Grail buy signals. And you can see why they are called Holy Grails. In this case, we're talking about a weekly Holy Grail sell that's on the table. You can see why. The last 3 times the S&P backtested, that's this red line here, backtested its 20-week moving average, it resulted in violent sell-offs, especially the early December backtest right here, which perpetuated an outside down week and the December massacre. Importantly, a trend line was created then in December by connecting the all-time high here with the December high, and the index is flirting with a test of that right here. In fact, it's not flirting with it, it's satisfied it. That trend line was tested right here for a possible third lower weekly high. Here's your first lower weekly high, your second lower weekly high, and a third lower weekly high at this trend line. Legendary trader W.D. Gann offered that fast moves come from third lower weekly highs. Likewise, fast rallies come from third higher weekly lows. So now we have a possible third lower weekly high in the wheelhouse. I don't think by any means that volatility is dead, so it wouldn't be a surprise to see a fast drop play out just when market participants are complacent again about the idea that the Powell put is alive and well and that the Fed has their back. Listen, if Powell can do a 180, he can do a 360. With that, I'll let you go. Good luck trading today. See you next time.